Welcome back to Investing Talk Podcast.
It is great to be back.
We have a situation today that I think it perfectly captures the absolute madness of this market right now. We're looking at a company that just reported earnings. And let's be clear, they didn't just beat earnings, they absolutely smashed them. Beat the bottom line by over $600 million.
It was a massive quarter. I mean, by almost every single metric, they won.
Right. But here's the tension, and it's driving me crazy looking at the screen. Despite that massive beat, the market responded by wiping, $30 billion off the company's valuation? Almost overnight.
Yeah.
It feels like financial gaslighting. So the question we have to answer today is pretty simple. Is this a broken stock? Or is this just a broken reaction from a very, very jittery market?
It really is the question of the week. And the company we're talking about is, of course, Advanced Micro Devices AMD.
The eternal rival. The Pepsi to NVIDIA's Coke.
You know, they're a lot more than just a rival now. We need to set the stakes here, like right away. This isn't just another chip stock.
Yeah.
AMD has positioned itself as the primary beneficiary of this huge global AI infrastructure build-out, second only to NVIDIA. We are looking at a company that CEO Lisa Su says is sitting on a major inflection year.
Inflection year is a nice corporate phrase, but the stock chart looks less like an inflection and more like a cliff right now.
It looks rough on the surface, I'll grant you that. But if we look past the red arrows on the screen and actually look at the business, despite this broader tech sell-off we're seeing, the fundamentals show a company that is absolutely on fire.
Specifically where?
Specifically in the data center.
Well, that's what we're here to figure out.
Okay.
Is this recent drop a buying opportunity, a clearance sale on a high-end asset, or is it a flashing red warning sign? As usual, before we start, subscribe, like, and comment to this video to support the show. It really helps us keep the lights on and these deep dives coming. All right, let's unpack this. You mentioned the company's on fire, but the stock price suggests someone just doused it with a bucket of cold water. So let's look under the hood. The fundamentals. What are the actual numbers telling us?
The numbers are telling a story of explosive growth, specifically where it counts. For the full year 2025, AMD posted record revenue. We're talking $34.6 billion.
Wow.
That's a massive number. But the real engine here, the thing driving this entire investment thesis, is the data center revenue.
And just to clarify for everyone listening, when we say data center in 2026, we're basically just speaking code for AI chips. Right?
Pretty much, yeah. It's the heavy iron that powers all the AI models. So data center revenue hit $16.6 billion for the year. That's up 32% year over year.
And it's accelerating.
It is. If you zoom in on just the fourth quarter, it gets even crazier. Q4 alone brought in $5.4 billion in data center revenue. That's up 39%.
So it's not tapering off, it's actually picking up speed right now.
It is accelerating as we speak. And about the earnings beat you mentioned in the intro, let's break that down. Consensus was looking for earnings per share of about $1.32.
Yeah.
AMD came in at $1.53. Total revenue was expected to be around $9.67 billion. They delivered $10.3 billion. They basically found an extra $600 million in the couch cushions.
Okay, so a huge beat. But I have to play the skeptic here. That's my job. We're heading into Q1. Historically, in the semiconductor world, Q1 is the hangover quarter.
The holiday bills come due.
Exactly. Everyone bought their laptops, their gaming consoles in December. Jan, Feb, March.
Yeah.
Usually soft. Our expectation is just too high. Is the market punishing them because they think this is the peak?
That is usually true, but this is where it gets really interesting. The guidance for Q1 2026 is shattering that historical trend. They're guiding for $9.8 billion in revenue, give or take $300 million.
And how does that compare to what Wall Street wanted?
Wall Street was expecting $9.37 billion, so they're beating the forward consensus too. That guidance implies 32% year-over-year growth. Lisa Su specifically highlighted this. The data center business is actually expanding from Q4 into Q1.
Wow.
It's completely breaking the typical seasonal downtime because the demand for AI infrastructure is it's that high.
So the AI demand is strong enough to override the usual seasonal slump. It's like selling ice cream in winter and breaking sales records. That is significant. But what about the rest of the business? Are they profitable?
Oh, yeah. Their financial health is rock solid. They posted a non-GAAP operating income record of $7.8 billion for 2025. Gross margins are healthy at 50% or 52% if you look at non-GAAP.
Okay.
And crucially, they aren't just a one-trick pony. The client and gaming segment that brought in $3.9 billion in Q4 up 37% year over year.
It's reassuring. It proves they aren't just fighting the AI hype train. The legacy business, the stuff on our laptops and PlayStations, that's still working too.
Exactly. But, the numbers are just the output. We have to talk about the input, the moat. Why is AMD winning?
The competitive advantage.
Yes. It comes down to two things: architecture and manufacturing. On the architecture side, you've got the Zen 5 Tech and their 3D VCAD.
Okay, pause. 3D V-Cache.
Uh,
I see this buzzword everywhere. For the listener who isn't a chip engineer, what does that actually do? Why do I care?
Okay, so think of a processor like a library. In a traditional chip, if you want more data, more books, you have to build more shelves outwards. You expand the floor plan.
Right. And the librarian has to walk further to get the book.
Which takes time.
Right.
Latency, exactly. 3D V-Cache is like realizing you can stack the shelves vertically, you build up. Suddenly, the processor core, the librarian, has access to way more data instantly right above its head. It makes them incredibly efficient for complex tasks like, gaming or AI.
Got it. Faster access, less travel time, more efficiency, and the manufacturing piece.
That's the trump card. AMD has exclusive access to TSMC's 2-nanometer process.
TSMC being Taiwan Semiconductor, the foundry that builds basically everything important.
The most important company in the world, arguably. And AMD's partnership there means they can pack more power into smaller, more efficient chips than anyone else. This gives them a structural, I'd say, 1 to 2 year lead over competitors.
And they're creating lock-in too, right, with the new systems.
Precisely. That's the holy grail. Once a hyperscaler, a Google, a Meta builds their data center around these AMD systems, it becomes very expensive and technically very hard to switch.
So you can't just unplug an AMD rack and plug in an NVIDIA one.
No, not at all. The software, the cooling, the power, it all gets customized. It's a huge switching cost.
Okay, so the car has a Ferrari engine, plenty of gas, a professional driver. But let's look at the road it's driving on. Let's pivot to the charts, because the price action is telling a pretty scary story.
Let's do it.
So as of January 28th, 2026, the stock was trading around 252 dues. And for context, this stock is up over 74% in the last 12 months.
It's had a massive run.
A huge run. But right now, it's trading at a forward PE price-to-earnings ratio of almost 40.
Which, historically speaking, is not cheap.
No, it's not. That basically means you're paying $40 today for every $1 of expected earnings. That prices in a lot of perfection. So when we see a drop after good earnings, is this just a sell the news situation?
I think so. I mean, context is everything here. We're in the middle of a broad tech sector rotation. The NASDAQ was down over 1.5%, Asian tech stocks sinking.
It's not just AMD.
It is not just AMD, but it's specific to them. Yes, we are seeing a classic sell the news event. Investors bought the rumor, got the good news, high-fived, and then took profits.
After a 74% run-up, I guess that makes sense.
Had to breathe. I view this as let's call it a psychological consolidation. It's not a structural breakdown where the company's failing. It's the market digesting a massive move higher.
So you think this is healthy? Because looking at my portfolio, it feels terrible.
It feels terrible, but yes, I think it is healthy. If you believe in the multi-year AI thesis, a retest of these support levels is actually an opportunity. It's the market repricing the risk for 2026 execution, not losing faith in the AI story itself.
It feels like a tug of war between the accountants and the day traders.
It is.
Which brings us to sentiment. How are people actually feeling about this stock? The quantitative scoring it's a weird mix. We're neutral to bullish on fundamentals, but the near-term technicals look bearish.
It's a split-brain market right now. It's a battle between strong earnings and sector-wide panic.
So what are the news headlines saying? Who's winning that narrative war?
On the bullish side, I mean, look at Google. They just announced massive AI spending plans. That directly validates AMD's entire market. You also have a lot of independent researchers, Substacks, calling this sell-off a gift.
And the bearish side.
It's mostly macro fear. You see headlines about a global tech sell-off, concerns that the cost of AI investment is exploding. It's the AI bubble narrative popping up again.
But the smart money, the institutions, what are they doing? Are they cutting and running?
From what we can see, sophisticated investors seem to be holding their conviction. They aren't panic selling. They're looking at the catalyst calendar.
Let's run through that calendar. If I'm holding this stock, what dates should I be circling in red?
Okay, so late April 2026, that's the next big test Q1 earnings. That will validate if that $9.8 billion guidance was real.
Right.
Then in June, we have Computex. We expect new product announcements. But the big one, the really big one, is Q3 and Q4 of this year.
Why? What happens then?
That's the window for the OpenAI deployment milestones.
This is the rumored deal.
It's more than a rumor. It's the multi-billion-dollar carrot dangling in front of investors. We're talking about the OpenAI 6-gigawatt deployment of MI450 chips.
6 gigawatts. That's the power consumption of a small country.
It is massive. If that happens on schedule in late 2026, we are talking about a huge revenue injection. That's what the bulls are waiting for.
Okay, but I have to stop you there. Because if everything was perfect, the stock wouldn't be down $30 billion. We need to look at the dark side. Let's drill into why the stock might actually be down. There are some real risks here.
There absolutely are, and they are significant.
Let's start with execution dependencies. You mentioned the OpenAI deployment, but that deployment relies on something called the UA-Link switch.
Right. This is a critical bottleneck. OpenAI's deployment needs these massive 72-chip rack configurations. Those racks do not work without third-party switches to route all the data traffic.
So it's like AMD can build the fastest race car in the world, but if the tires, which are made by someone else, don't show up, the car can't race.
That's a perfect analogy. If those switches are delayed, the whole deployment slips. AMD can have the chips ready, sitting on a pallet, but if the switches aren't there, they can't ship the full system.
So AMD's revenue is basically held hostage by a third-party component maker. That is terrifying.
It's a classic supply chain risk.
And then there's the memory shortage. I'm seeing reports about HBM4. That's the high bandwidth memory these AI chips need. SK Hynix says their entire 2026 supply is already sold out.
And here is the problem. AMD is third in line.
Behind who?
NVIDIA and Google.
Ouch! So if you're third in line at the buffet and the food runs out,
You go hungry. Or, in this case, you pay a massive premium to get what's left. We're estimating they might have to pay 15 to 20% premiums to get that memory.
and that does what to margins?
It compresses them by maybe 150 to 200 basis points. That hurts profitability directly.
Okay, so that explains the margin concerns.
Yeah.
And speaking of scary numbers, let's talk customer concentration. We keep mentioning OpenAI, but OpenAI is burning cash like a bonfire.
They are, about $50 billion annually. They lost $12 billion in a single quarter recently.
That is sustainable for about 5 minutes.
It is a precarious position, and there's a middleman problem, too. Oracle is a huge buyer of AMD chips. They ordered 50,000 MI450s, but they're just reselling that capacity. So if downstream demand from OpenAI or XAI cracks, Oracle could just cancel that order. AMD is one step removed from the end user, which adds a layer of risk.
It's a domino effect. If the startup at the end of the chain fails, the whole chain collapses back to AMD. And on top of that, data center operating margins actually fell recently, didn't they?
They did. They dropped from 29% to 25%. Stacy Razgon over at Bernstein had a pretty biting quote about this. He said, the OPEX ramp is starting to become a bit tiresome.
Tiresome is analyst speak for fix this or we sell. So is this fatal?
I don't think so. I'd offer a rebuttal here. Diversification limits the tail risk. Remember that Q1 guidance assumes only $100 million from China, so they aren't relying on geopolitical wildcards.
Okay.
And regarding the margins, as the TSMC 20-meter yield improves and HBM4 supply normalizes in the second half of this year, those margins should recover toward their 35% target.
So the bear case is real, but it's largely about timing and supply chains resolving themselves.
Exactly. It's execution risk, not a fundamental product failure.
All right, we've seen the record numbers. We've seen the terrifying supply chain bottlenecks. It is time for the final score. Based on everything we've discussed, what's your verdict?
Taking everything into account, the massive growth, the execution risks, and the market pricing, I give AMD a bullish score of 7.5 out of 10.
7.5. Walk us through that.
Look, the execution has been exceptional. You don't hit record earnings by accident. But the stock is priced for perfect execution at a 40 times PE, and we just discussed that execution in 2026 will be difficult.
There will be bumps.
There will be bumps. However, the investment thesis remains totally intact. AMD is the primary beneficiary of AI infrastructure outside of NVIDIA, and that TSMC 2-nanometer partnership gives them a manufacturing lead that is just so hard to replicate.
What kind of upside are we talking about?
If the execution risks resolve, if the switches arrive, if the memory is secured, I think a target price upside of 30 to 50% is achievable from these levels.
That is substantial. So for the listener trying to figure out how to play this, what are the timelines?
I see two paths. If you're a trader, there's a swing trade opportunity here. You're looking at a 2 to 3 month window leading into the April Q1 earnings. You want to catch the relief rally when they prove that $9.8 billion guidance wasn't a fluke.
And for the buy and hold crowd?
For the long term, this is a multi-year hold, 2026 to 2028. You are holding for the full ramp of the OpenAI deployment. You have to be willing to stomach the volatility, but the structural tailwinds are there.
So, in summary, the stock drop is a rational repricing of risk, not a sign of a broken company. The engine is fine, the road is just a little bumpy for a bit.
That is the perfect way to put it.
And here's a final thought for you to mull over. Everyone is focused on AMD selling chips to OpenAI. But what happens if the AI models themselves become so efficient that they don't need as much compute power in 2027? We're betting on infinite demand, but efficiency is the enemy of volume. Something to think about.
That is the billion-dollar question.
That's it for today's analysis on AMD. Don't forget to subscribe, like, and comment to this video to support the show. We'll see you in the next one.